Good morning, students. Welcome back. So, I think there are a lot of auditing standards and topics that we have discussed, and they were all about the financial statements and various aspects related to the financial statements. Okay, when I say financial statements, means the financial statements that we prepare within the general framework. Okay, as per the laws and regulations. Something that we also call as statutory audit for the purposes of audit of financial statements particularly. Correct. So now what we will do is we'll just continue on the discussions related to audit. Okay, so more of it will be around assurance services only, but there are certain different aspects which we'll plan to cover today. When I say different aspects, means now it will not be specifically about the audit of the financial statements, but some other types of audits as well. Okay. So let's get on to this discussion. So there are a couple of chapters we are planning to cover today. So let me just share this first one. So some of the specialized areas that we now look at. I'll just share the document. Just give me a minute. All right, so this is chapter 8. Okay. Now in this chapter, when we say specialized area, so now what is the meaning of specialized area? So in this chapter, you can say there are 3 auditing standards we plan to cover. SA 800, which deals with the audit of financial statements. Now you'll be thinking that why the financial statements have come over again. So these are the financial statements which are prepared in accordance with special reporting framework. Okay, so the different thing which you get to see over here is special reporting framework. Then we have SA 805, which deals with the audit of single financial statement, or maybe a specific element, account, or item of a financial statement only. So it's not a complete set of financial statement, unlike what we have done so far. Third is about SA 810, which deals with the engagements to report on summary financial statements. Okay, it's an engagement to report on summary financial statements, which are derived from the audited financial statements, you can say, which are audited by that same auditor. Yeah, so this third aspect particularly, I think this is clearly not an audit or full-blown audit, but as around SA 800, you must be thinking that this is audit of financial statement. So how is it different? Okay, so let me now just touch upon the special reporting framework. Now, what is this special purpose? What is the special reporting framework? So let me just share one document and we'll just try to discuss this with the help of an example. Just give me a minute. Okay, so let's suppose audit of financial statements as per the statute, which we call as statutory audit, is completed. Fine. So we are talking about financial statements. So that's audited. Now, for the same period for which you have audited, let's suppose the period for which the financial statements was audited was 2024-25. So this is audited. And as per the laws and regulations, that general purpose framework, okay, all of those things that have been covered. Now, what has happened? Now, for the same period, let's suppose the investor of this company. So this company has got an investor who requires the financial statements to be audited, but they got to be prepared, let's suppose, in a different gap. So currently, if you look at this financial statement which have been audited, so they were prepared in Ind AS. Okay, as per the local requirements, they were prepared. Let's suppose now the investor requires that for the same period, financial statement should also be prepared as per IFRS. Or let's suppose investor is in UK, so it wants as per UK GAAP. Similarly, it could be any other GAAP. Yeah. Now the set of financial statements which are being prepared, they are not the general purpose framework. Yes or no? Yeah. So they are prepared for a special purpose. Yeah. Or you can say a different purpose. So the financial statements will be full. So it will be a complete set. Something that you see under that particular gap. So we are not saying that only a balance sheet will be prepared, only a P&L will be prepared, or maybe you'll have balance sheet, P&L, cash flow, and limited notes. No, a full-blown, complete set of financial statements will be prepared. So then what is going to change? Or what is not going to be there in the set of financial statements? Of course, local gap. Okay, that is not going to be there. So that's why, what do you call this financial statement as? Special purpose. Means prepared for a special purpose. Right? In this case, if this financial statement is also required to be audited, what do? Now the audit will have to be performed. Correct? So which auditing standard do you apply? So that is where you go to this auditing standard. Why? Because these are prepared under special reporting framework. Yeah, these are for special purposes. Now special means other than, of course, the purpose that we just discussed. Okay, clear on this? Yeah.
Sir, I have a question.
Yes.
So when we are preparing the financial statements in the UK, as per the
Yes.
UK IFRS, then we have to follow the standards on auditing of the UK itself.
That again depends. See, if let's suppose we are required to follow international auditing standards, let's suppose that's the mandate, then do we need to go to this auditing standard of India? No. No, that is not required. Okay, then of course our auditing standards will change. Then we do not go to SA 800 or some of these auditing standards. Why? Because these are the ones which are meant for those audits wherein you will apply this. If you do not apply this, then you do not go to these auditing standards. So we are talking about a situation wherein the preparation, the management which the management has done, that is for a special purpose. Okay, and because it's a special purpose, so that's why when this is going to be audited, so that's why you do not get onto the general purpose. That's why you get into the special purpose. Clear?
Okay, clear.
And such type of mandate, a lot of times may arise from the investors. Generally, the mandate is not for the audit or the audited financial statements. Generally, the mandate is for the special purpose financial statements. But if let's suppose that special purpose financial statements is required to be audited as well, let's suppose that's what the investor or maybe the parent company requires. So there again, you'll have two things to ask them. Do I follow ISA? If no, then of course you will follow as per the local auditing standards. Okay. And again, even if you compare these two auditing standards, there are a lot of similarities. But again, our idea is not to get onto those international auditing standards, of course. Okay. Clear?
Yes, sir.
Okay, great. So now let's quickly look at some points. So SA 800 defines special purpose framework as a financial reporting framework designed to meet the financial information needs of specific users. Requirements of applicable financial reporting framework determine the form and content of financial statements and what constitutes a complete set of financial statements. Now, in this case, there's another pointer. Now, that is also important. Let's suppose there's an Indian company, and for some local compliances only, I'm not going to the international investor now. I'm not changing the gap at all. Let's suppose the gap is also local gap. The requirement is also there in India. Let's suppose for some local requirement, a set of financial statements is required to be prepared. Okay. But that set will not be the complete set, the one that you prepare as per Ind AS 1 or something which Schedule 3 requires. Means full blown set you will not prepare. So they require that you prepare only the balance sheet, maybe the P&L, okay, and some limited notes. Now that set again which you are preparing is a special purpose. Okay. So when you are talking about special purpose, you should just simply remember that this is the one that could be for any purpose other than the statutory purposes that you always look at. Okay. Yeah. Now, there are a lot of examples you can consider for that. Right. And while you prepare those set of financial statements, there again, it is not necessary that you'll have to comply with Ind AS or IFRS or maybe a particular gap. Maybe that particular person who requires that special purpose financial statements may give its own accounting policies for the company to follow. So they may say that you prepare the financial statements using the set of accounting policies, set of accounting principles that we provide. So can that be done? Of course, because these are meant for special purpose only. Yeah, so therein you specify very clearly, and that's why you have this another auditing standard which deals with that particular special purpose financial statements. So the audit report then that goes out, so that also clarifies it's a special purpose one. Okay. Now, in this case, when you are auditing such type of financial statements, so the basic aspects related to the audit, so you'll continue to follow that. Okay. So it's not that you will not be following some of those requirements. Those will continue to remain. So those are not going to change. Means independence, ethical requirements, discussions with the management, agreeing on the terms of the engagement letter, management's responsibility, auditor's responsibility, planning, execution, okay, set of procedures that you follow when it comes to audit. Because please remember, it's an audit. Okay, so you should not be thinking that there are any shortcuts or there are some of the things you will not be required to do. Each and everything which you do in case of audit will also be required to be considered over here, because this is again an audit, right? So we are not just repeating each and every point. Yeah, so that is something you'll have to always look at. But there's one more point which you will generally see included in the audit report. Now, what is that? See, it's a special purpose financial statements. So it is meant for a special purpose only. Yes or no? So think about a company which is preparing the financial statements. Let's suppose one as per statute, one for special purposes for the same period, using the same gap. Maybe some differences are there. Now, in this case, the special purpose financial statements are meant only for that purpose. Entity should not be using that for general purposes. That's why one para is included. What do you call it as? Restrictions on distribution or use. So auditor may consider it appropriate to indicate that the auditor's report is intended solely for specific users, depending on the law or the regulation which is applicable. This may be achieved by restricting the distribution or the use of the auditor's report. Okay, so what type of note can be included by the auditor? We draw attention to note so and so to the financial statements. Now, what do you have in that particular note? So that is about basis of preparation. So whenever the financial statements are prepared, do you have a note on basis of preparation of financial statements? Tell me, do you see that or not? Quickly.
No, sir. No, sir.
No. Why no?
Because sir, it is prepared as per the generally accepted auditing principle.
Okay. So let me just do one thing. Okay, just give me a minute. Let me just open one document. Okay, so I'll just try to open one document. Just to clarify, because I think this is important for you. Again, this is not really something related to audit, but important for the auditor, because anything which is meant for the management is something which the auditor will have to check. So this set of financial statements which you can see, okay, that's for a company which is preparing the financial statements for local reporting purposes, as per the statute, as per Ind AS, right? Yeah. Now in this case, you have this balance sheet, profit and loss, cash flow statement, all of these components you have. Okay, then you have the statement of changes in equity. What do you generally see? So that is how the financial statements will always start. Yes or no? Then there is note 1. So this note 1, every time you see for any company, what does it talk about? Background of the company. So you can say it's a brief about the company. So do you see this in the financial statements or not? Every time you look at any financial statements, tell me quickly. Yes, or no? Okay. Then the note number 2 that you see, what does it talk about? Material accounting policies. Yes or no? Right?
Yes.
It's about the accounting policies always. Now, let's look at this accounting policy. So you have statement of compliance to begin with, and then you have basis of preparation. Can you see this or not?
Yes, sir.
So in the basis of preparation, the first para that you have, what does it say? Financial statements have been prepared on historical cost, except for certain financial instruments which are measured at fair value, as explained in the accounting policies below. And then, of course, various accounting policies will follow. Correct? Yeah. And before this basis of preparation, there is another para. What does it say? These financial statements have been prepared in accordance with Ind AS as notified under Companies Ind AS Accounting Standard Rules 2015, so and so. Now, the set of financial statements which you get to see in this case. Okay. Now, can you see the basis for preparation or not? Tell me quickly now.
Yes, sir.
Yeah. So that is the basis of preparation we have been discussing. Now, clear on this? Okay. Clear on this?
Yes.
Okay. Now, let me just also do one thing. Okay. Just to give you some, maybe slightly more clarity in terms of this basis of preparation. Okay, so I'll just open one document. Just give me a minute. Okay, so we have this another set of financial statements that you can see. Now, this is the set of financial statements which has been prepared by the company. Okay. Now, if you look at the company, so which financial year is this? This is 23-24, right? Now, this financial statement has been prepared by the company as per IFRS. Here again, when you go to note number 1, what do you have? You have the brief about the company. Okay. And then in the second para, in the notes, you have statement of compliance, basis of preparation. Can you see this or not? Yeah. So the basis of preparation will always be there. Please remember, right? Okay. Now let's come back to this. We draw attention to note number 10 to the financial statements, which describes the basis of accounting. Okay. I'm just hoping that now you can relate to this. What is this basis of accounting? The financial statements are prepared to assist the company in compliance with financial reporting provisions of the contract referred to above. As a result, financial statements may not be suitable for another purpose. Our report is intended solely for the company and DEF Company Liability Limited and should not be distributed to or used by parties other than the company or DEF. So you can say that there is a company, maybe DEF is the investor. Okay, so that's why auditor is clarifying that this audit report which goes out, that is on a financial statements which are prepared only for special purposes, which are meant only for the company or maybe this DEF, which could be their investor or maybe any stakeholder. So that's why our report is also meant only for this purpose. You should not be using it anywhere else. So you should not be submitting this to ROC. You should not be giving it to income tax. Okay. So for that purposes, there is another audit report that is on statutory audit. Okay. Clear? Yeah. In this case, auditor is once again clarifying that by giving this note, I'm not creating any sort of modification. It's not a modification. In this note, I'm just clarifying that it's a restricted usage which you need to consider. Till the time you use it only for that purpose, it is okay. But if it is used for another purposes, that is not appropriate, and that is what is clarified in the audit report as well. Clear? Everyone clear on this?
Yes, sir.
All right, great. So now, quickly, before we move on to the questions, I think what we can do is we can just look at all of these aspects as around the standard, and then we'll pick up the questions. Then we have this SA 805. There again, we have the special considerations. Now, what are these special considerations? Here again, we have audit, but now the audit is of single financial statement, or you can say a specific element, account, or item of a financial statement. Can somebody explain what do we have in this auditing standard? What do we cover here? How is it different? Over to you.
Sir, it is regarding the audit of a specific element like the trade receivables or the trade payables or any other particular item in the financial statement.
Okay. And how is it different from any other thing? Let's suppose if you compare this to SA 800, how is it different?
SA 800 is for the overall financial statements, But
Okay.
in the standard, we have to just audit the particular element of the financial statement.
Okay, good. Anyone else?
Yes, sir. SCA 800 is talk about the special concentration of the financial statement as a whole
Right,
when it is prepared for the special purpose.
right.
So the what are the audit point to be considered? Here in
Okay,
the 808 special consideration of audit of finance, see in the financial statements, it will have so many component like balance sheet, profit and loss account, cash flow, and the statement of changes in equity and notes to the account. If any of these items or element,
right,
see in the financial statement, there are so many elements are there. Say
right.
example, balance sheet, the asset, fixed asset,
Yes.
liability, and the income or expenses. Any one of the items is selected for the special purpose. So those items, how we are going to audit and how we are going to give the report for that.
Okay, great. So now let's quickly look at some of these aspects as well. See, this essay again deals with special considerations in the application of those essays, but to the audit of a single financial statement, or you can say a specific element. So let's broadly put it in a manner that it's a specific element which is getting covered. And that specific element may be prepared in accordance with general or special purpose framework. So if that specific element, whatever be the case, is prepared in accordance with special purpose framework, so then you will also apply the requirements of SA 800. Okay. Now, what could be this specific element, single financial statement? We can say, let's suppose there is a component of the financial statements. Let's suppose only a cash flow. Maybe somewhere only the cash flow is required to be looked at. So that's why you are not auditing the complete set, you are only auditing the cash flow. So that is what you call a single financial statement. There could be any element, let's suppose only particular area is required to be looked at. For example, trade receivables could be there, cash and bank balances could be there. At times, these may be required to be reported at some places. Yeah. So because these are required to be reported at certain places. So that's why what do? That's why when you are reporting them, you are clarifying that we are only reporting on that particular area, that particular animal. That's it. Yeah. But please remember it's an audit. So the moment you say it's an audit, so what will happen? You will have to express an opinion. Yeah. So now the opinion that you express will not be on the complete set. You can say that will be on the limited part. Yeah. So whatever you provide, you will provide the opinion also on that. Okay. So that's how it goes. Now, while expressing the opinion, because it's an audit, so that's why you'll have to look at all of those considerations related to audit here as well. Yeah, why? Because the moment you bring in an audit, so of course, each and every aspect related to the audit will have to be considered. You'll have to go by sort of formalities related to engagement in terms of independence, in terms of ethical requirements, okay, in terms of some of the requirements related to audit, which is about audit planning, which is about audit procedures in terms of execution, okay, that sort of risk assessment in relation to that particular area, and then of course the conclusions and the reporting. And while you report, you may have some issues, okay, you may have some sort of requirements related to that, which you want to include in the audit report, which could be in the form of negative reporting as well. So that's why you can have a modification on that, or you may be good about it. So that's how it really goes. Okay. So I think some of these examples we have already looked at as to what could be the elements, but you can just quickly flip through this. Let's suppose there's a schedule of profit participation or employee bonuses, wherein you are also required to give notes on that. Yeah. A schedule of net tangible assets with the notes to accounts. Accounts receivable could be there, inventory could be there. Yeah. It could be related to any item. Yeah. Now, when it comes to such type of audit, generally these are not the one which you get to see quite often. See, when you look at financial statements, the complete set which you discussed in case of SA 800, that is quite common. Okay, but some of these things are not very common. Yeah. All right. Now let's quickly move on to this third auditing standard as well. So that is about SA 810, engagements to report on summary financial statements. So can somebody explain what is this standard all about? Over to you.
Sir, then this standard is talk about that when the complete set of financial statement is prepared either under the general purpose framework or the special purpose framework. For
Okay.
that, he will give the summary financial report, like abridged financials, abridged financial. See, these are the requirement of the some public sector in public sector and the listed company. They will present in the newspaper also. They in the summarized form. These are the profit. These are in the summarized form. It is limited. It's not the fully the
Correct.
yeah. It is not the full set of financial statement, but they will give it the summary manner.
Right.
The summary is not famous in this India. Actually, it is
Yes.
in the US. Actually, here we
Okay.
will say it's a abridged financial statement.
Right.
So that here, what is the audit? The engagement report on the report. See, actually, the whenever we are getting engagement for the summary financial statement, if the auditor is done that already that the complete set of financial statement, then only he has to accept the summary financial. Otherwise, when he is first time if he is accepting, he cannot be able to provide the opinion on it because he
Right.
did not done that audit completely.
Yes.
So that it is advisable always the auditor who has done that complete set of financial audit, those person only he can prepare the summary financial audit also on that audit.
Okay. Very good. Anyone else who would like to add something to this? Yes, quickly. Over to you. Anything that you would like to add? No?
Sir, almost right.
Almost?
Perfect, sir. Almost summaries.
Sorry, you are not audible. Can you speak a bit louder, please?
No, sir, almost same is said.
Okay.
I know this much only.
Okay. He's trying to say that I have the same response. Huh? Okay, great. Good. All right. So now what are these summary financial statements? So they again reflect the historical financial information, but that is derived from the financial statements. Okay. Now what set of financial statements? Complete set. So say for example, there's a complete set of financial statements which have been prepared. From that, if you are generating a summary, I think one of the terminologies which Swami mentioned, that's good. That is what you call as abridged. Okay, many a times you get to see this requirement to report the financial information in an abridged manner, which is more about a summary. Or you can say wherein you do not include everything, you include some of the limited aspects. Yeah, so your basis is what? Your basis is, of course, the complete set which have been audited, from which you are generating some sort of, in a way, limited part. Okay, now this contains less detail than the financial statements while providing a structured representation consistent with that provided by the financial statement. Okay. Different laws and regulations may use different terminology to describe such historical financial information. But as we discussed that generally, what do you have? Generally, one of the requirements which you get to see is in the form of abridged financial statements, and that is also the term that you use is also called as abridged. But of course, if let's suppose this is generated from any other place, from any other requirement, so there again you may have different terminology which the reporting person may have to look at. Right? Now, in this particular case, there are some different aspects one has to consider. So let's talk about all of those requirements. Now, when it comes to the auditor means, say for example, there's a company who has audited the financial statements of that particular company. Now, that auditor shall ordinarily accept this type of engagement. So now we are not calling this as audit, we are calling this as engagement. Okay, because herein you are not auditing. Yes or no? Yeah. If he has to accept an engagement to report on summary financial statements. Yeah. So that is something you'll do when the auditor has been engaged to conduct an audit on the full set of financial statements, because only then he will get the comfort. If the auditor has not also audited the financial statement from which the summary is required to be derived, auditor shall not have the necessary knowledge to discharge his responsibilities in relation to that particular summary, obviously. Otherwise, it will be more of a, you can say, job, something which you expect out of management. Yes or no? See, auditor is not the management here, because idea is not to prepare, idea is to report on that. And for an auditor to report on that is possible, or you can say you'll expect that when the auditor would also have audited the basis. What is the basis here? In this case, the basis, of course, is about the complete audit which he would have performed. If that is not performed, then of course it doesn't help. Yeah, so that's why this is the basic requirement you'll always expect. Okay, that he should have audited the complete set. That's why he has got this complete comfort, and that's how he can just sort of extract the required information, prepare that in a report that in a summarized manner, or maybe he can just look at that extracted information, because this again extraction, this derivation, all of these aspects will have to be done by the management only, company only. Auditor will be required to report upon that. Okay, yeah. Moving further. Now here again, some of the formalities related to the acceptance. So those engagement letter, some of those criterias that we generally discuss will also be required to be looked at here. Means what will become the basis, where does this requirement come from, if at all this is required to be done, what are going to be the management's responsibilities. Okay, so obtain the agreement of management that it acknowledges and understands its responsibilities. So there are going to be some responsibilities on the part of the management. So that is something you'll have to again, and what is it that the auditor will be required to do. So that means the responsibilities in relation to auditor. So now what are going to be the procedures which he will consider doing this? First, evaluate whether the summary financial statements adequately disclose their summarized nature and identify the audited financial statements, means whether their basis is correct or not. When the summary financial statements are not accompanied by audited financial statements, evaluate whether they describe clearly from where, from whom audited financial statements are available, or law or regulation that specifies that the audited financial statements need not be made available to the intended users of summary financial statements. You can say somewhere that reference has to be there. Okay, if the reference is not there, so clarification should be there that why the reference is missing. Compare the summary financial statements with the related information in the full set. I'm just calling it as full set. Okay, to determine whether the summary financial statements agree with or can be recalculated from the related information. So of course, you will have to do that sort of comparison because that's how the financial statements would have been derived. Evaluate in view of purpose of summary financial statements whether summary financial statements contain the information necessary and are at an appropriate level of aggregation so as not to be misleading in the circumstances. See, as we discussed that there will be a specific requirement for the summary financial statement, so auditor will have to check that all of those requirements have been taken care of or not. So it's a summary, but again, in the summary, there will be some criteria, some parameters. So whether all of those things have been taken care of or not. In the summary, something should not get missed out. Yeah, so that's something you'll have to ensure. Evaluate whether the audited financial statements are available to the intended users without undue difficulty, unless law or regulation provide they are not available. Okay. Now, form of opinion. Now, this is again important. When the auditor has concluded unmodified opinion on the summary financial statements is appropriate, auditor's opinion shall, unless otherwise required by law or regulation, use one or more of the following phrases. One of the following phrases. Accompanying summary financial statements are consistent in all material respects with the audited financial statements. Or accompanying summary financial statements are a fair summary of audited financial statements in accordance with the applied criteria. Now, why is that important? See, that is important because in this case, summary is getting generated on the basis of, you can say, full list. Yeah. So that is what the auditor is required to report on. Auditor is not saying that I have audited this. Auditor is saying that I am reporting on this. Okay, this is what I have really checked, and these are the limited procedures he is doing anyways on this. If the law or regulation prescribes the wording of opinion on the summary financial statements in terms that are different from those described above, auditor shall apply the procedures discussed earlier and any further procedures necessary to enable him to express the desired opinion. Evaluate whether the users of summary financial statements might understand the auditor's opinion, and if so, whether additional explanation can mitigate the possible misunderstanding. Now, this again may arise out of the requirements of the law or regulation. So if at all it arises, somebody needs to look at it. So I think in this case, once again, we can just quickly look at the elements of the auditor's report. So of course, a title has to be there. Who is this really addressed to? Then identification of the summary financial statements on which auditor is reporting, including the title included in the summary financial statements. Okay. Then of course, identification of audited financial statements. That is important because that is the basis. A clear express of an opinion. So that is where you have the opinion. Statement that the summary financial statements do not contain all the disclosures. All the disclosures means something which you have in full set. So auditor is clarifying that please remember it's not a full set. Yeah. So you should not be considering that it's a full set. It's a substitute. No. For the full set, you need to go to full set. If required, then a statement that the summary financial statements and audited financial statements do not reflect effects of events that occurred subsequent to date of auditor's report. Reference to the auditor's report on audited financial statements means the complete one. So that reference as well. Description of management's responsibilities, again very important. Statement that auditor is responsible, auditor's responsibility. Then of course he'll have to sign. Okay, that similar sort of formalities he'll have to consider, UDIN, etc. Okay, date, etc. he'll have to give there. Right? Auditor shall date the auditor's report on the summary financial statements no earlier than now. This is again very important point. Date of the auditor's report on the audited financial statements. So that's one. Date on which auditor has obtained sufficient appropriate audit evidence on which to base the opinion, including the evidence that the summary financial statements have been prepared and then those with the recognized authority have asserted that they have taken responsibility for them. Okay, then of course the place of signature has to be there. Modifications, if at all they are there, then you'll have to look at the requirements of specific standard. If at all auditor believes that there is some sort of inconsistency which is there in the summary, so that is where you will get to see this. But generally this is not included. Okay, generally you don't get to see these type of modifications because it's all about consistency, which the management will always plan to be. Okay, yeah. Then here again, because it's a sort of specific requirement, so you'll have that clause on the restriction or the distribution. Yes or no? Yeah, because this is meant for a special purpose only. Yeah, so here again, auditor will be including that particular para in the report. Now, if the audited financial statements contain comparatives, but the summary financial statements do not contain comparatives, auditor shall determine whether such omission is reasonable. Auditor shall determine effect of unreasonable omission, if any, if the summary financial statements contain comparatives that were reported by another auditor. Auditor's report shall also contain matters that SA 710 requires the auditor to include in the auditor's report on audited financial statements. Okay. If let's suppose there is unaudited supplementary information which has been presented with summary financial statements, then what do? In this case, auditor shall evaluate whether any unaudited supplementary information which is going out is clearly differentiated or not. If the auditor concludes that the entity's presentation of unaudited supplementary information is not clearly differentiated, auditor shall ask the management to change the presentation. If the management refuses, auditor shall have to consider the reporting requirements. Okay. Then of course there are a lot of information which goes in this, so I'll just not really get on to all of those points. I think timing of work, some of these aspects we have looked at. Okay, so now what we can do is, now we can just look at some of the questions.
I have a query.
Yes.
Sir, it is necessary that if the full set of financial statements auditor has given the modified report, and in the summary financial statements report, the auditor should also have to give the modified report?
No, so when it comes to the summary financial statements, if let's suppose some of those elements are continuing, which you have in the financial statements on which the modification has gone out, then of course in the summary he'll have to give the reference and he'll have to again bring out that this sort of modification is there. Yeah, so it's all about carryover impact that you need to analyze.
Okay, sir. One another query is that, sir, the abridged financial statements and the condensed financial statements are same?
Sorry?
Abridged and the condensed are same?
No, condensed are different. Abridged are different.
Okay, in this standard we are talking about abridged only.
Yeah, we are talking about abridged only.
Okay.
Okay. There's another set of financial statements because you have just touched upon this point. Okay, if you go to the accounting standard, there's a term which you use, interim set of financial statements. Yes or no? Interim set.
Yes, India
You heard
30.
about it? Yeah. So that interim is nothing but condensed generally. So that's how it goes. And in terms of interim, what do you have? You'll have, some sort of limited requirements. See, some of these requirements are quite specific. So that's why this has been put under 800 series, because these are arising out of some special framework generally. Unlike the one that you have in case of condensed, which is more about interim, but wherein you are looking at some of the similar requirements related to the one that you have the financial statements.
Yes, got it, sir. Clear.
Okay, so now what I'll do is I just take you to the questions. Just give me a minute. Okay, so what we have done is, okay, so let's look at this first one. CA Lalita is auditor of a company. She is also offered professional work of audit of financial statements prepared specifically for meeting the requirements of a loan agreement for the same period. She chooses to accept the work and has made up her mind to disclose this fact in emphasis of matter paragraph. So you can say an EUM she will include in the audit report to be issued by her for this specific engagement. So do you agree with the approach of CA Lalita? So I would request you to answer it in a particular manner. First of all, if you can just help me understand. So what type of engagement is this? Number one. Number two, which auditing standard you will apply here? And of course, then the requirement of the question. Do you agree with the approach which she seems to have picked up over here?
Sir, it is related to SF 805 specific element,
Okay.
and I think her approach is right since she has to include that matter into the emphasis of matter paragraph.
Okay. Anyone else?
Sir, when this is audit of financial statements. It's talk about is particularly the special purpose, specific purpose. We talk about the 800 SA because the
Okay.
financial statement as a whole, but it is a loan agreement. It's a
Right.
special purpose. When
Okay.
she do the audit of the financial statement, he will the
Yes.
special purpose framework will be covered based on the loan agreement. What are the terms and conditions is given? Whether the same way the
Yes.
the client is prepared that the financial statement or not, he will go through everything and he will provide the audit report accordingly. And he will include the emphasis of matter paragraph, and also she will state that emphasis of matter paragraph, basis of accounting and the restriction and the distribution and its use. She will in that she has to specifically mention that this audit is prepared for the specific purpose and as per the special framework is provided, and based on that we are giving. This is not for the circulation, this is for the specific purpose only. This is used
Okay.
for the specific audit.
Right. Right.
Yeah, he has to report on that paragraph.
Okay. Very good. Anyone else? Anyone else? No? All right. So let's look at this. Yeah. So in this case, Let me just move on to the solution. Approach of the auditor looks okay. There is no bar upon accepting such an engagement, even though she is the auditor of the company. Besides, she has intended to disclose this fact in the EUM matter paragraph, okay, which seems to be completely all right. But I think one of the aspects that we need to consider in this case is about the application of auditing standard. Now, in this case,
So in this case, the
yes,
application of audit standard is applicable, sir. See, actually, we heard she has to comply with all the 200 to 700. She has to follow that.
right,
But see, here there is a one thing she should see. What is the special purpose framework is given?
right,
Accordingly, she go to audit. Also,
yes,
she has to follow the standards on audit, which is general purpose framework. That also she has to follow. Say example, with respect to materiality. Say
right,
example, the materiality is agreed between that client and the user, intended user.
correct,
That materiality is fixed. But
right,
however, when she performs that audit, she
yes,
has to she has to apply on her own performance
right,
materiality, which would be lower than the materiality fixed by that agreed the special purpose framework.
right,
This is one of the example. Likewise, she has to follow all the standards on auditing. She has to follow it.
correct.
See,
To
which
begin
means
with,
that which means that whenever there is a special purpose framework, we need to only adhere to the special purpose framework. See, we should not deviate from see that whatever it is there, we have to follow. In addition to that, we have to follow the SAA 200 to 700 as well.
correct. That's absolutely correct. Why? Because when it comes to the basic premise of the audit, that will always remain same. Some of the basic requirements of audit that will also remain same. So those are not going to change. So you're absolutely right in saying that some of those series of 200, 300, okay, so on that you look at. So that is what you will always consider in the application of any type of audits. But another point that we need to now consider here is that to begin with, when you will come across such type of situations, so what is the first auditing standard with which you will associate this requirement with? Yes or no?
Yes, sir.
So in this case,
First SA is talks about 215 with the 210. It's talk about engagement of the assignment.
right, correct. So now when you enter into that engagement letter with the entity, so somewhere you'll have to specify that as an auditor, what is it that you are going to do? So you need to have that clarity that as an auditor, you need to do something and which auditing standard you need to consider that, because that is going to be your starting point. So in this case, it's the audit of financial statements. Yeah. So every time you come across this situation, please remember that even in the exam, this is how you'll have to look at it. Yeah. So you are talking about financial statements here, which are prepared specifically for meeting the requirements of loan agreement. So what does it mean?
Special purpose.
Special purpose. The moment it's a special purpose, where do you go? You go to 800 series.
800 series.
So it means now the management is going to prepare the financial statements, maybe in a different manner altogether, or maybe in a similar manner, but for which the reporting requirement is going to be different. So that's why generally the preparation will also be different to a certain extent. Otherwise, why can't the management use the same statutory audit report which you would have issued? They can do that. Okay. So definitely while preparation, something would have changed. And that's why you'll have also similar sort of change appearing in the basis of preparation as well. But now comes the question that even if you go to SA 800 series, so therein you have various auditing standards. So which auditing standard you will consider? So you'll have to consider the one which is on complete set.
It's a complete set.
Yeah.
Because it's a financial statement.
Correct. Because it's not talking about any particular component, any particular requirement, any particular sort of summary. It's talking about a financial statement. So that's why, which one do you apply?
SA 800.
SA 800. Clear? Everyone clear?
Yes, sir.
Okay, great. Next. CA Lakshmi has prepared a draft audit report for the financial statements of X Limited, prepared in accordance with financial reporting provisions of a contract with Y Limited. She has drafted this audit report wherein there is an unmodified opinion. Besides, she has also drawn attention in the draft audit report to note A to the financial statements, which describes the basis of accounting under the heading basis of accounting. How she should ensure that the report would not be misused. Number one, draft a suitable para to be included in the report for this purpose. Now, before you get on to the solution, okay, so now some of the things which you need to now remember is, see, there are two types of questions, I would say. That's how you can see the questions in the exam. One is the type that we just looked at, wherein you are looking at the situation. You are trying to analyze which auditing standard will apply. And depending on the auditing standard that applies, you'll have to just share your knowledge. Yeah. So you'll have to, sort of give your thought process that about this situation, do you agree with or do you not agree which auditing standard you are applying? So that's how you will be required to do. So in this case, in this particular question, you're sharing your thoughts, wherein the language that you use will not matter so much actually. So now in terms of the language, I'm saying, even if you are not too technical in terms of sharing your language, it doesn't matter much. Of course, you should give the reference of the auditing standards, some of these things, that's very important, and that will only help you. Then there is another set of questions, something like this. Now in this case, there's one problem. Let me just call it as a problem. Okay, so that we can find a solution to that. In this case, there are two questions. First is about, again, sharing the thoughts. Okay, so you are required to share as to how she can ensure that the report will not be misused. So there again, what will happen? You will get onto the auditing standard, you will look at the requirements, and you'll help, you can sort of clarify that this is how this sort of situation can be dealt with. Once again, when it comes to the language part, again, it's not too technical. Then you have the second requirement of the question, or you can say the second category. That is about drafting a suitable para to be included in the report. Okay, now in this case, please remember, in a way, you are now required to prepare an extract of the audit report. So whenever you will be drafting some of these paras, of course, it will not be easy for you to be using the exact language. Okay, very, very difficult for you to use the exact language, which will always go out in the audit report. But once again, it's very important that you are using some sort of technical terms. Okay, so the more you can associate yourself with the technical language which goes out in the audit report, while drafting this, the more it will help you. So this can only come with practice. And what sort of practice? You can just write this. Okay, so a written practice will always help you. So is that required to be done for the complete audit report? Not really, but some of these elements which you find in the questions, I would suggest that's one part that you should always plan to practice. That will only help you. Okay, help you to a great extent. Okay, and becomes important as well. Right? Now, in this case, while answering this, I would request you to again maybe try to attempt as to how will you draft this particular para. Yes or no? Yeah. So over to you now. Now, in this case, there are two questions. How she should ensure the report is not getting misused. So that's one. Second, what is going to be the para she needs to include in the audit report? Over to you.
Sir, firstly, she is preparing the audit report of financial statement. It is
Right.
complete set of X Limited.
Right.
And also see financial reporting provision of a contract,
Right.
which means it talks about that special purpose.
Right.
And also she is giving the unmodified opinion,
Right.
which means it's a clean report.
Right.
And also she given that note A also she given in the financial statement,
Right.
which already describes the basis of accounting.
Right.
Now the question is that how she will report in her audit report,
Correct.
and how we will suitably prepare draft the paragraph for that.
Correct.
So in this case, in her audit report, she can put the basis of accounting and the restriction and the distribution and use.
Okay.
Since she is given that unmodified opinion, she can put her first line is that without modifying our opinion,
Okay.
and refer to that note number A,
Right.
and that describe the basis of accounting.
Okay.
And we have prepared that financial statement based on the specific purpose of the contract.
Right.
And it should be used for that particular purpose only.
Right.
And it is not suitable for other purpose.
Right.
And also this report is solely the purpose of that contract only.
Right.
And it is not meant for distribution.
Okay.
Distribution to other party.
Right.
Other than that, between the this is what, sir.
Okay. But in this case, if you can just also clarify that how she can ensure that the report is not misused. So what is the meaning of misuse here? And of course, how can she really protect the misuse?
The
Now, what is this misuse which is discussed here?
misuse means that is what she is putting on the basis of restriction and distribution and use. Use is also she is clearly giving that it is a intent and purpose and not suitable for others, and report is prepared based on that special framework is provided.
Great. So now in this case, because it's a report meant for special purposes, what is a special purpose? This is meant for some contract which X Limited has with Y Limited. Okay, maybe they had some understanding that one set of financial statements needs to be prepared specifically meant for Y Limited as per the requirements of Y Limited. Okay, it was a requirement.
And I think also we can put in the one line, this report is specifically prepared for the X between X and Y. It is intended use for only for that person alone.
Correct. So when this report is meant only for Y Limited, so that's why from the company's perspective, of course, they should not be using it for any other purposes. They should only be sharing this report with Y Limited. Why? Because as a company, so if let's suppose we talk about X Limited, X Limited is required to provide financial statements to Y Limited. And we are talking about special purpose financial statements here. Correct? Now, Y Limited may require, or it must be requiring, that this financial statement that you provide must be audited. Yes or no? So that's why financial statement will go out and the audit report on that financial statement will also go out. And what is this audit report? This is again a special purpose one on which SA 800 would have been applied. So now in this case, X Limited should be restricted. Ideally, X Limited should not be sharing this particular set of financial statement with anybody else. Or if let's suppose X Limited decides to use this financial statements with let's suppose any other party, with let's suppose any regulator also, X can do that. It's up to X. The only point is that such other party should not be getting access to this audit report. Why? Because this audit report is meant only for Y. So how can the auditor prevent X Limited from doing that? Very simple. Somewhere in his audit report, auditor can write that this particular audit report is meant only for a specific party, naming that party within the audit report itself. So any other user, any other stakeholder who will read that report, so what will he get to know? That this is not meant for me, this is meant for somebody else. So that's why if he is relying on that particular audit report, then that will be at the risk of that particular user. Yeah, so that's how this particular auditor, C. Lakshmi, can protect the misuse of the audit report by the management, because eventually it's going to be there with the management always. Yeah, so that's how this can be prevented. But I think the another important part in this particular question was about drafting a suitable para. Yes or
Sir,
no?
I have a query here.
Yes.
Whether that report has to be filed with the regulatory authorities?
No, so unless it's a requirement, or you can say it's a special purpose requirement arising out of that particular regulator, for which that particular audit has been performed, that particular financial statement has been performed, this should not go out to them, because it's not meant for them. It's for a special purpose. See, what do you mean by special purpose? Special purpose means a defined purpose is there. So you have prepared something for a defined purpose. It is meant only for that purpose. It's not for any other purpose. And let's suppose now there is a regulator. Say the regulator got to know that this company has prepared something called as special purpose financial statement, which is also audited. And that regulator is asking for that. And X Limited had to share that with the regulator. So when the regulator will read that, regulator will also understand that this audit report is not meant for regulator. This audit report is meant for that particular purpose only. Idea is that any user who gets the access to that particular audit report should get a clarity that it's not meant for that particular user, except for the defined per user. Clear?
Yes, and it should not be disclosed in the public.
Of course not, because it's a restricted usage report.
Yes, sir, correct.
Yeah, and the management will always not be doing that. Okay, if let's suppose by chance somebody gets the access to that. So see, idea is not that we do not want to share this with anybody else. Okay, so we do not want to hide this. Intent is not to hide. intent is very simple. Let me just also help you understand this point. Now, what is the objective? Okay, why are we looking at such type of requirement? Now, what is the rationale? Let's suppose this company, which company is this? X Limited. Say this company has prepared two set of financial statement. One is the financial statement as per Ind AS. Okay, that general purpose, all sort of requirements. So let me just call it as Ind AS. And there is another set of financial statement this company has prepared, which Y Limited required, and the accounting principles which have been used in this second set. So this is the first set. This second set is different. Now, let's suppose if there is a stakeholder. Okay, there is a stakeholder. If the stakeholder gets the access to this financial statement, say by mistake, instead of this one. Yeah, so the stakeholder should be clear. He should not be relying on this particular audit report. Why? Because this is not meant for stakeholder. Understood?
Sir, say example, if the accounts department, instead of uploading in the public document as a general purpose financial statement, specifically they uploaded by mistakenly.
Yeah, of course.
Yeah,
That can happen.
yeah, if that is the case, the general public will access to that financial statement.
So when they access to that, so they will also get to know that this is meant for special purposes. It's not meant for them.
Correct. That is the reason we are putting the restriction and the distribution and the use.
Right. So that's what you are trying to clarify so that the stakeholders should get to know about it. Okay.
Yes, clear. Yes.
Everyone clear? Okay. Now, I think let me just go back to this point. So the important part for us was how should this report be drafted in terms of this particular para. So can you just help me understand how do you draft that para? Over to you quickly.
Sir, I will put that basis for accounting, restriction and distribution and use. That is heading.
No, so
I
I
will put.
want the language of the para from you, not the
Oh,
story. So just
okay.
straight away get on to the para that you will draft. Yeah.
Okay. Sir, without modification of opinion, because it is clean report, unmodified report.
So will you write this thing? I want verbatim. So let's start with inverted commas. Do not speak anything in between. I want the wordings.
Okay.
I do not want any story now. I want the wordings you will include in the para. If you want to write down, you can share that in the message. If you want to speak, then you have to speak something which you will write down only. Okay, do not write anything in between. Over to you quickly.
Okay, sir. I will. Okay. Without modifying our opinion,
Yes.
we are bringing the attention to note number A of the financial statement,
Okay.
which deals about the basis of accounting,
Okay.
and we have prepared that financial statement to assist the company as per the
Okay.
special as per the provision provided in the contract.
Okay.
Full stop.
Right.
Based on that, the financial statement may not be suitable for other purpose.
Right.
This report is intended only for X Limited and Y Limited
Okay.
and should not be distributed or used
Right.
by other party other
Okay.
than X Limited and Y Limited.
Okay.
This is what I will write, sir.
Okay, great. Anyone else? Anyone else quickly? See, some of these things are important, because till the day you don't do this, it's not important that you match with what will be there always, or you are not able to draft it properly. Just try to attempt this, because when you attempt this, that is when you get to know that it's not something which is going to be easy. So that's why the more and more you do, the better it is. Okay, clear? Everyone clear? All right, so now let me just quickly take you to this. Okay, so now in this case, how do you draft it? Without modifying our opinion, we draw attention to note this, which describes the basis of accounting. Financial statements are prepared to assist the company to comply with the financial reporting provisions. Now, this is the sentence which you can pick from the question, because this is something you'll get to know from the particular scenario. As a result, financial statements may not be suitable for another purpose. See, there are two generic sentences. First, third, second, you will pick from the question itself. Yeah. Then our report is intended solely for X and Y and should not be distributed to used by parties other than X and Y. Okay. So then again, this is a sort of standard wording that you will include. Clear? Yeah. All right. So let's look at the next one. C.M. Surya is auditor for financial statements for an entity which is prepared in accordance with financial reporting provisions of a contract. He is also offered audit of trade receivables appearing in above financial statements. So there are two audits he has been offered. One is, of course, the audit of financial statements, and second is about audit of trade receivables. Can he accept this engagement for audit of trade receivables? That's one. Discuss brief outline of his audit approach that he needs to consider. Over to you.
Yes, sir. She is prepared the financial statement
Okay.
and the
So can
provisions
you
of
tell
the
me to
contract.
begin with which auditing standard you will apply here?
Sir, 1 minute, but I'm understanding the question. The thing is that she prepared that financial statement accordance with
No,
the
no. So
financial.
while you understand, let others answer, quickly. Yes, somebody who can answer this. Which auditing standard you will apply here?
So SA 805.
05.
SA 805. So which auditing standard is that?
It's about the audit of the specific element of a financial statement.
Okay, very good. So why do you say it's an audit of specific element? Because it's only about one area of the
Trade receivables.
financial statements. Yeah. So now, have you got the clarity, Swami? Now are you clear on this?
Yes, sir. Actually, this auditing of trade receivables, it's talk about that the elements and the specific. It is coming under S05.
Right.
But however, when she doing the audit of that, she
Right.
has to refer that the 800 also will applicable for that.
Okay. All right. So now in this case, can he accept such an engagement?
Yeah, she can accept, sir.
Okay. And what is going to be the approach in this case for the audit to be performed? What is going to be the approach? So briefly, you are just required to comment on that. Over to you, quickly.
So the audit approach will be it will covering that SA 800 as and the SA 805, sir.
Okay.
SA 800, it's talk about what is the financial framework it's given, what is the provision content, and she has to follow each and every point mentioned in the 800. Also, the trade receivable, it's talk about the 805. 805 also she will comply to that.
Okay, so now it's about the single element, or you can say this essay which you consider. In this case, the financial statements are prepared in accordance with financial reporting provisions of a contract. So, what do you mean by this? Clearly, it's a special reporting framework. Yeah. So, which means the financial statements have been audited as per SA 800. Okay. In this case, what should she do? She should be looking at those specific requirements only. Yes or no? Why? Because it's a special reporting framework. It's not the one that you will generally find, or the general purpose framework is not there. So while applying the audit approach, so of course, some of the procedures she can consider, that is about planning. Okay, means how to audit the trade receivable. So some of the procedures she will design, so she will understand about it. Okay, so that basic approach of audit she will always follow, but at the same time he should be considering the requirements of SA 800 as well. Why? Because the framework is different in this case. Everyone clear?
Yes, sir. Clear, sir.
Okay, great. Next.
Sir,
Yes.
suppose if Mr. Surya is not the auditor of the company, then can he accept, sir, audit?
Yes, he can accept that. There is no problem, because in this case, Mr. Surya is required to audit. Yeah, the only problem which is going to happen will be that as far as the audit approach is concerned, the work of Mr. Surya will increase significantly because he has not already performed the audit of financial statements. Yeah, so this entire audit approach he'll have to consider. Okay, some of the basic aspects related to audit he'll have to start from scratch, because he can't rely on the audit of another auditor. So that's how it goes, and that's why generally some of these things are not offered to different auditors. Okay. Next, CAGA. So I think let me just move on to the next one. Okay, now let's look at this next one. CA Madhur is auditor of a company and has issued audit report dated 15th June of a particular year. Okay. Audit report on summary financial statements. Now, please understand, audit report on summary financial statements derived from such audited financial statements is dated 15th July of that particular year. Discuss whether there exists any additional reporting responsibility for auditor in such a situation in respect of audit report on summary financial statements. Over to you.
Sir, SA 810 will be applicable in this case.
Very good.
It's on the summary. It's on the report on the summary financial statement.
Okay.
And the date of summary financial statement is of 15th July, which is after the main audit report of 15th June.
Right.
Which is correct.
Okay.
But additional yes, reporting requirement responsibility on the auditor is regarding that the summary financial statement audit report isn't prepared accordance with the full-fledged financial statement reports.
Okay. What else? Anything else? Anything else that you like to add to this?
Sir, here the thing is that it's dated. The financial statement originally issued on the 15th.
Right.
And that summary statement is issued on the July subsequent month. It is a correct only. But
right,
however, if the original statement audit report it contain any subsequent events,
right,
yeah, in that case, Yeah, if there is no subsequent event, that is a good. Otherwise, if the subsequent event also is mentioned over there, we need to mention that also in this report.
Yeah, so that is also going to be one of the considerations on the part of the auditor here, because there's a time gap of 1 month. Okay, so that's why auditor's report on the summary financial statement should state that the summary financial statements and the audited financial statements do not reflect a fact of events that occurred subsequent to the date of auditor's report on audited financial statements. Means for that 1 month which has gone by, okay, nothing is really looked at by us. Yes or no? And let's also try to understand this. Okay, so this is something which every time we'll have to consider. Say when it comes to the full set, so full set got audited on 15th June. And then you go to this summary. Okay, now for this summary, what will you do? You will use the complete set as the basis, on which basis you will do the reporting on summary. But for this 1 month, will you be doing anything as far as that summary is concerned? No. Yeah, so that's what you need to specify. Clear? Clear on this?
Yes, sir.
All right, so let's look at one more. Consider that the audit report on financial statements issued by CA Madhur for the above said company contains qualified opinion. So we are talking about audit report on financial statements. Okay, that contains a qualified opinion. Can he issue unmodified opinion on the summary financial statements derived from audited financial statements? Discuss. Over to you.
No, sir, he cannot.
Okay. Anyone else? Quickly. If the auditor, so let's look at this. If the auditor is satisfied that the summary financial statements are consistent in all material respects with or are a fair summary of audited financial statements in accordance with applied criteria, he can issue unmodified opinion. However, when the auditor's report on audited financial statements contains a qualified opinion, auditor's report on summary shall also contain the following. What is that? State auditor's report on audited financial statement contains a qualified opinion. Number 2, describe basis for such qualified opinion which has gone into the audited financial statements, and the qualified opinion in the auditor's report on the audited financial statements. Effect thereof on the summary financial statements, if any. Yeah, so this aspect, I think this becomes important. That what is going to be the impact of that on the summary? Because that is how the auditor will have to take the final call. Okay, so that's what CA Madhur needs to additionally consider in this case. Clear?
Yes, sir. Yes, sir. If the company is prepared the summary financial statement based on the exactly what is the audited financial statement, then we can give the unmodified opinion, the clean report. If they are not providing as per that the audited financial statement, the summary financial statement, if there is any difference, the gap is there.
Right.
If is a modified opinion,
correct,
then the auditor definitely can give in the summary financial report, he unmodified opinion also the auditor can give.
Correct.
And sir, it can only happen if the auditors are different.
No, not necessarily. Not necessarily.
Okay.
Yeah, so auditor need not be different in that case. That's not the requirement. Huh? Okay, so then I think we can look at this one. Huh? Fifth, Mr. BK has been engaged by XYZ to report on summary financial statements derived from financial statements audited by him in accordance with auditing standards. Mr. BK wants to determine whether the applied criteria are acceptable before accepting such assignment. Guide him the factors affecting auditor's determination of the acceptability of applied criteria as per the relevant standards on auditing. Over to you. So in this case, what should BK do? Yes, tell me.
Sir, here the applicable accounting standard is SCA 810. It is
Right,
talking about report on summary financial auditor responsibility on report of the summary financial statement.
right. What else? So let's look at this.
Sir,
Yes,
yeah, before accepting, the thing is that if the auditor is already the person BK is ensured that is exactly what are the audited financial statement is exactly is prepared or not.
yes. So let's look at this. So Mr. BK has been engaged by XYZ to report on summary, yeah, which is derived from the financial statements audited by him. Now, SA 810 is something you will consider.
Yes,
Now,
sir.
before accepting an engagement to report on summary, auditor shall determine whether applied criteria are acceptable. Now, this applied criteria refers to the criteria applied by the management in preparation of summary. So, the factors which the auditor need to consider will be what? Nature of the entity, purpose of the summary, information needs of the intended users, and whether the applied criteria will result in summary financial statements that are not misleading. So that's how it goes. Clear? Yeah,
So now,
everyone?
sir, and also if that engage summary is prepared on the special purpose for financial framework, then it will applicable the 810 also 800 also will apply. In the summary is prepared.
Sir, you are not audible, sir.
Sorry, so I think mute was pressed. So I was just this one is correct. Yeah. So all right. Any questions if you have on this? Any questions? Any doubts? Otherwise, we can take a break now.
Yeah, it's clear, sir. Thank you, sir.
Okay, great. So I think after the break, we can just move on to the next chapter. Fine. Okay,
Right,
Ashok,
sir.
let's take a break. move on to the next topic. Yeah. So I think I have this query from Ravi. Ravi, I'm not sure whether it's covered by.
Yes, sir.
Yeah, it's covered. Okay,
Answer.
great.
Yes, sir.
Right. So let me just open the other document. Just give me a minute. Okay, so if you're referring the study, I think you can get on to chapter number 9. So I think interesting topic that is about standards on related services. Now, in this particular, you can say sort of series, there are a couple of standards that we have. These are again quality control standards, not really the audit standards, because over here we are not doing the audit. Yeah. Now the scope is different. What is the scope? Either it is about agreed upon procedures or the compilation. So let's talk about both of them one by one. So SRS, standards on related services. Related means related to sort of audit. But please remember, it's not an audit. Huh? So let's not get confused by that. So we are not talking about audit here. So first, agreed upon audit procedures or agreed upon procedures. Yeah, so either way you can call it as. Now, what are related services? Assurance engagement means an engagement in which practitioner means a CA expresses a conclusion designed to enhance the degree of confidence of intended users other than responsible party about the outcome of evaluation or measurement of subject matter against the criteria. Yeah, so that's, you can say broadly, this is always the objective with which you perform any engagement, that there is some desired criteria against which you will do the evaluation, and you will give your outcome as to what did you achieve or what did you look at. Okay, now every time you have some assurance related engagement, so this is something you will always be doing. But all the engagements are not the assurance engagements, so there could be some other engagements as well. Preparation of tax returns, where you do not provide any conclusion conveying assurance. Similarly, there could be consulting engagements, which is more about management function. Yeah. There could be some engagements which are covered by standards for related services. Now, these are the two that we are covering. Agreed upon procedures. Very popularly, this is also called as AUP. AUP. Okay. Now, in this case, what do you do? If you go by the terminology, it's the procedures which you have agreed upon. Okay. Procedures that you have agreed upon. Now, what does it mean and what are you required to do in this case? So let's suppose you are the one, or let's suppose you are a chartered accountant, and let me just put it this way, you are a chartered accountant and this is the company. So we have company A Limited. So this is the company and you are CA. Now, in relation to some financial information, now we are not talking about financial statements at all. Even if you talk about a financial statement, we are using the term financial information because that financial statement is nothing but a financial information also. Yes or no? Now, in relation to some financial information, which is prepared by the company, so far what we have discussed, that every time as an auditor, what do? You will audit this. Okay, so every time what do? You will audit this financial information. So this is what you keep doing. This is what we have discussed so far. Now tell me one thing, when you audit this financial information, so for audit of this financial information, who will design the audit procedures? Tell me.
Auditor.
Auditor. And will the auditor be dependent on the management in terms of designing of audit procedures?
No.
No. Will the management have any say in designing of audit procedures?
Again, no.
Again, no. So that is what you do in case of audit. In case of audit, you will discuss the scope with the management and you will say that management is looking at an outcome. What is the outcome? Opinion. Okay, so you'll agree that that's the outcome you want. You want my opinion? Okay, great. I'll provide you my opinion. Now, for providing my opinion, I'll be required to do, let's suppose, 20 things. I'll do that and I'll share my opinion with you. Of course, I'll need your support for performing those 20 audit procedures. But as far as those procedures are concerned, those are going to be my independent procedures. I'll decide, I'll choose which procedures to perform, when to perform, how to perform. Correct? So that's the approach which you consider in case of audit. But sometimes what may happen is, again, for a special purpose, or you can say for a specific purpose. In fact, let me just not use this term, otherwise this will create a confusion. Let's suppose for a specific purpose, management is not looking at your opinion. Okay, they do not want your opinion. They do not want to check whether the financial information is giving a true and fair view or not. Okay, so all of those objectives are not there. But in this financial information, they want some verification to be performed. Yeah, they want some verification to be done. Means some examination is required, some checking is required, verification is required, some sort of testing is required. Okay, maybe you are required to perform some test of details, some test of controls. Similar sort of procedures are required, which you will do in case of audit. Not the complete set, I'm saying similar set. So in such a case, what the management may ask you is that instead of audit, you perform some procedures for me. For example, on PPE, management may say that you may check the depreciation calculation. Now the auditor may ask that what is the meaning of depreciation calculation checking? What do you mean by checking of that? Do I need to check whether the useful life you have considered is appropriate or not? Or do I need to just check the arithmetical accuracy of the working file that you would have prepared, assuming that all the inputs which have gone in that, they are correct? Yes or no? Yeah, because both the types of procedures could be there. So now in this case, management will very specifically ask the CA what procedures are required to be performed. So that is what both these parties will now agree upon. Yeah. So now both these parties will agree as around what? Agree as around the procedures that need to be performed. So in this case, when it comes to the procedures which are required to be performed by a chartered accountant, who is actually designing that? Both of them together. They are designing them. They will then agree that, okay, that these are the procedures. That could be related to a particular assertion, that could be related to various assertions, that could be related to a particular area, that could be related to a particular component, okay, that could be related to a single financial element, that could be related to single financial statement, okay, it could be related to anything. Important point is what? Important point is that these procedures are agreed in advance. Later on, that CA will not be performing anything beyond such audit procedures. Yeah, so you can say there is a restriction in terms of the procedures, or there's a boundary which that CA has drawn for himself and which the management are also drawn for that CA. That beyond this you will not go. This is the only thing you are required to do.
Sir,
So yes.
Yes, sir. When the CA is engaged in the designing and the procedures of the audit procedure with the management, and sir, after that, the CA is also auditing the same. So there will be any conflict because the segregation of duty concept and the maker-checker concept will get affected in this case?
No. Let's try to understand this point, that when it comes to agreed upon procedures, what is the role of CA? Let's suppose there's a depreciation calculation. So who will prepare that working? CA is not going to prepare. Management will prepare. Let's suppose there are some limited procedures CA is required to perform on the financial information. So who will prepare the financial information? It's the management. It's not the CA. See, the role of CA is not that of the management function. He's not playing any management role. Yeah. He will be performing the procedures only. When it comes to designing the audit procedures, why I'm saying both of them will agree that they will design, that it's something which is agreed between two parties. It may have happened that management already knows that we want these 10 procedures to be performed. They've reached out to CA, passed on to CA that these are the 10 procedures you need to perform. Okay, so the management in itself has designed the audit procedures, which the CA is now required to come and check. Okay, so that's how you need to look into it. Now, if let's suppose this CA also happens to be the auditor. See, generally, when the CA is the auditor, or when the management has already got this financial statements audited for that particular period, because the audit is already performed, they generally do not require this AUP from any chartered accountant. That is not generally required. So where this generally required, as we discussed, this could be a specific requirement. For example, maybe there is a company in India. Okay, let me just discuss one sort of scenario, okay, with which you can just identify. Let's suppose there's a company A Limited that's in India. It has got one investor, let's suppose in Germany. Yeah. Now A Limited is preparing its financial statements as per Indian GAAP or Ind AS, which is also audited by a chartered accountant. So financial statements are there, those are also audited. This investor, for the purposes of reporting, is looking for some financial information from A Limited. And generally, when you look at the investors who are outside India, they will have their different reporting framework, which may not fully align with what is there in Indian reporting framework. They may also have their set of accounting principles at times, which could be different. Now, with India, a lot of alignment has taken place, but still there could be some different requirements. And in this case, because this German investor has got a company in Germany, so they may also require to consolidate A Limited, for which the consolidation of A Limited will be required. So that's why some set of audit procedures may have to be performed on A Limited. Now, in this case, it may happen that the auditor of that German company, because A Limited is not very significant to the group, may decide that audit is not required for A. So what can he do? He may ask that only certain line items of A Limited's financial statements are good enough. If those are checked and shared with me, then it will help me as far as the consolidated financial statements are concerned. So that's where A Limited may require a CA who will perform those limited procedures, which can then be shared with the group company. Okay? Yeah? Now clear on this? Everyone clear on this?
Yes, sir.
Great. Now, the important point here is that when the CA will provide the report, so it will not have any opinion. It will also not have any conclusion. So what will the CA do? So the CA will put down the procedure which was required and will say that I have performed the procedure. And if there is any observation, because it's kind of a checklist which the CA has to, sort of fulfill, complete. So if, let's suppose, depreciation calculation is required to be checked, so he'll say, yes, I've checked the depreciation calculation. And in the remarks, he'll say, do I have any observations? No, it's good. So that's how it goes. So that's the form of report which the CA will provide. Will it have any opinion that these are the areas I've checked and they are good? No. Will it have any conclusion that nothing comes to my attention in respect of these areas? No. So all sort of those reporting requirements will not be there. So it's going to be different one. Why? Because it's only limited to the procedures performed by the CA. Clear? Everyone clear? What is AUP?
Yes, sir.
Yes, sir.
All right. So let's quickly look at some of the aspects. I'm sure you have got the perspective as to what is the difference between audit and AUP. There's a significant difference between these two. Okay. Now, some of the requirements in relation to AUP, that is about independence, ethical requirements. So will they continue to apply? Answer is yes. Why? Because here again, the role is that of checking. Yeah, so all of those ethical requirements have to be in place. That anyways is required to be in place. Yeah. Now, in this case, engagement letter becomes a very critical document. Because without the engagement letter, will the CA have any clarity of what is required to be done? See, when it comes to the statutory audit, it's quite standard. Of course, there again you have the engagement letter, but I'm saying in this case, that is your starting point. That's what you start with. Otherwise, you do not have any clarity as to what is required to be done. Yes or no? Yeah, so that is important document for for this, you can say audit, this AUP to be performed. Now, when the chartered accountant will be performing the AUP, so in this case, will he be required to follow some of those requirements related to audit? Means planning, some sort of that assessment? The answer is yes. See, as far as those procedures are concerned, so those procedures need to be planned. So he needs to have that clarity around those areas. He needs to have the assessment in terms of those areas. Of course, the idea is not to get into the risk assessment because that is already done and that's how the audit procedures are designed. But as far as the planning is concerned, okay, what is going to be the basis? The understanding of those areas which are required to be checked, that will be required on the part of the practitioner in this case. Okay, clear? Now, as we discussed, what is going to be the reporting? You will have title, then the addressee, identification of specific financial or non-financial information to which the agreed upon procedures need to be applied, statement that the procedures were those agreed upon with the recipient, statement that engagement was performed in accordance with SRS, identification of the purpose for which these AUP were performed, listing of the specific audit procedures. Now, this is the important part. Within the report, all those procedures you'll have to list out. So you can say there will be a table. Okay. Description of auditor's actual findings. So there will be a table for the remarks, observations. Statement that procedures performed do not constitute either an audit or a review. Means there is no assurance involved. There is no opinion, there is no conclusion. Statement that auditor performed additional procedures, an audit or a review, other matters might have come to the light which would have been reported, okay, which is not the given case. Statement that the report is restricted to those parties. Now here again, because it's a specific purpose, so that's why there has to be restriction. It's only meant for that particular party. Statement that the report relates only to the elements, accounts, items, financial, non-financial information which is specified. And it should not be considered as if it relates to financial statements as a whole. So that clarification needs to be provided. Then of course, date, place, signature, all of these things have to follow. Clear? Yeah, clear? See, the important part here is that there is no opinion, there is no conclusion. I'm just hoping you have got that clarity, right?
Sir, this document is to be confidential. It is to be with the management and the auditor only.
So you can say it's similar to what you have in case of SA 800 like we discussed. So that's the confidentiality. Means you will share this with the stakeholders or the relevant person who requires this report. It's not meant for somebody else. It's meant for that person only. So to that extent, you can say it's similar in nature. Right?
Yes, sir.
Okay. So then let's look at this next SRS also, and then we'll look at the questions. SRS 4410, which is about compilation. Okay, now in this case, actually we are not performing any procedures. Okay, of course, you can call this compilation as a procedure in itself, but as such, there is no checking which is involved. So in this case, practitioner is engaged to assist the management with the preparation and presentation of historical financial information without obtaining any assurance on that information and to report on the engagement in accordance with SRS. So what is a compilation engagement? Let's understand. It's an engagement in which practitioner applies accounting and financial reporting expertise to assist the management in preparation and presentation of financial information. So in this case, a practitioner is engaged, but he will be assisting the management. So there's no checking which is going on. The only point is that after assisting the management in the preparation, he will also be required to give one report. Now, with the report, please do not get confused. So every time when we talk about a report, it doesn't mean the report has to be on the checking only or the verification only. Yeah. So that sort of confusion you should not have. Clear? Now, management may request any sort of requirement on the part of the practitioner, which the practitioner will have to look at. Again, in this case, the important part is that as far as that preparation or the presentation goes, there has to be an expertise. Yeah, so that expertise has to be there, because without that expertise, he will not be able to assist the management. Okay, now.
Because like the expertise of India's, if the management wants to take the services of the accountant.
Yes, you can say that. Now, financial information that is the subject of a compilation engagement may be required for various purposes. For example, to comply with mandatory periodical financial reporting requirements, for purposes unrelated to mandatory financial reporting requirements. For example, for management prepared on a basis appropriate for their particular purposes, such as MIS reporting, which is actually a type of, you can say, financial information which they prepare for their internal uses. Okay, or maybe for periodic financial reporting undertaken for external parties under a contract, such as financial information provided to a funding body to support provision or continuation of a grant. For transactional purposes as well. For example, to support a transaction involving changes to entities' ownership or financing structure, such as for a merger or acquisition. Now, please remember, compilation engagement is not an assurance engagement. It doesn't require practitioner to verify the accuracy, completeness of the information which has been provided by the management. His role is what? To compile. That's it. That's why he's not expressing any opinion, any review. He's not doing that. And here, he is also not performing any procedures. So that's why he will not be saying that I've checked this, this was found to be okay. I've checked this, this was found to be okay. Something that you have in case of AUP. Okay. So again, you should not get confused that it's just something which is related to AUP.
But sir, he can be the auditor also, no?
He can be the auditor for what?
For that company which on which the company has taken the services for compilation engagement.
Generally, no. Generally, no. Okay. Now, the scope of this compilation, as we discussed, may vary. Management retains the responsibility for financial information and the basis on which it is prepared and presented. Now, this is important. See, in this case, you can say the practitioner is an extended arm of the management. He's supporting the management. So, can we say that he is the one who has done everything? Maybe, but still, that's an assistance he has provided. Eventually, it's the management who is responsible for that. Okay, so the responsibility on the part of the management, the most important point is that doesn't go away. So the management later on cannot say that I am not responsible for this. Practitioner is responsible. Yeah. So will the ethical requirements apply? Yes, of course. See, as a chartered accountant, any work you do, so every time ethical requirements will have to be followed. Yeah. So as far as the ethical requirements are concerned, will there be any exception to that? The answer is no. Ethical requirements will have to be followed. So now, in this case, the only exception one can say will be around what? Independence. Okay. So that requirement related to independence will not apply. Why? Because now assurance services are not involved. So where do you need the independence? Wherever the assurance services are required to be performed. Clear? Clear on this?
Yes, sir.
Yeah.
Yes.
So this is one important aspect. Huh? Okay. Now, of course, as around the engagement, acceptance, continuance, some of those requirements will continue to look at. So what is it that the management will do? What is it that the practitioner will do? Yeah. So that sort of clarity anyway. So you pick up any job and you'll always need to have that in place. Yeah. As to who is going to do what. Now, as around the practitioner's report. Now, what is it that you will have in the report? Of course, the roles and responsibilities, the nature of the work, and a clarification that it's not about the opinion. Yeah. So let's look at some of these elements because these are important. One, when it comes to the report, so you'll have to specify that as far as this report goes, the addressee who is there, statement that practitioner has compiled the financial information based on information provided, description of management responsibility. Okay, that is important. Means what is it that the management was responsible for? Identification of applicable financial reporting framework or a description or reference to the description of that special reporting framework. Because generally this work will be in around the financial information only. Identification of financial information, including the title of each element of financial information. It comprises more than one element and the date period for which it relates. Now, responsibilities of the practitioner in compiling the financial information. Okay. Description of what a compilation engagement entails. So, explanation. Now, this we can read. Since a compilation engagement is not an assurance engagement, practitioner is not required to verify the accuracy or completeness. Accordingly, practitioner doesn't express opinion or view. Now, see, I'm just repeating some of these points over and over again because these are important for you because this can create a confusion in the exam. Huh? If the financial information is prepared using special purpose reporting framework, so an explanation for that should also come out. Accordingly, we'll change it. And then, of course, date of practitioner's report, practitioner's signature, and the place. Clear? Yeah.
And sir,
Okay.
UDIN is also required to be generated for this?
No. So in this case, because it's not an assurance report, so that's why you do not have that requirement related to UDIN.
And sir, for agreed upon procedure, SRS 4400?
Yeah. So that is where you should be doing that.
Okay, sir.
Okay, that is where you should be doing that. But at times for the compilation also, because the practitioner is involved, so at times people end up generating for this one also. You see, in fact, these days what generally happens is that for some of these types of reports which are produced, UDIN is produced, and idea is again, to just ensure the authenticity and to ensure that this is something which is going out from a chartered accountant. Yeah, so that's
Yes.
how it goes. Okay. Now what we can do is to get some more clarity on this. Let's once again pick up some questions. Yeah, so let me just get on to those questions to get some clarity. Just a minute. Okay, so let's look at this one. Okay, so let's look at this one. KM Limited has engaged your firm for compilation of financial statements in accordance with requirements of SRS 4410. Okay. You also came to know that company is setting up a new unit, which is in Odisha. Okay. Just give me a minute. Company management has provided you with a draft trial balance and requires assistance in preparation and presentation of financial statements for the year ended 31st March 24. Management requires such a preparation and presentation for its internal use. Okay. During the course of engagement, it is noticed that there are apparent errors in few opening balances brought forward from previous year relating to some outstanding incentives receivable from the government authorities. These have been swapped with some other balances in the trial balance. However, there are no credit transactions in such incentive accounts or accounts whose balances have been swapped during the year. So that's one. One of the team members suggests that it is one of the duties to ensure that revenue figures stated in the trial balance at least are verified to ensure all revenues required to be booked by the company have in fact been booked. It is also suggested by the team member that even though it's a compilation engagement, quality control aspects like adhering to the appropriate standards need to be followed. Before signing and issuing report under SRS 4410, you once again read the financial information. It comes to your notice that the figures relating to setting up of a unit of the company coming up in Rourkela in Orissa have not been properly disclosed in the compiled financial statements. Expenditure was incurred from a bank account maintained in Rourkela and was omitted to be shown under the appropriate heads. You are vacillating regarding above considering scope of compilation engagements. Your team has prepared detailed documentation during the course of engagement. Okay. Keeping in view, answer the following questions. So I'm just hoping that the fact pattern is all clear to you. Quickly, please confirm. Is the fact pattern all clear?
Yes, sir. Clear, sir.
Okay, great. Now, by chance, if you want some more clarity on the fact pattern, okay, some of the things if you want to add to this while answering the questions, so you can also refer the study material. Okay, yeah. Now, I'll just move on to the questions. That is what we can discuss one by one. Okay, and because these are, I think, MCQs, so that's why I would request everyone to answer. Okay, that is important. So there's a specific purpose why I picked up this particular, case scenario, because it's MCQ. So I think your participation will be easy.
Recording in progress.
That is about opening balances. That has got Sumit is going with B. What about others?
Sir, I'm also going with
Let the others also answer.
0, the review engagement. Find the significant important to merit balance noticed. This is why I chosen that.
Such error should be brought.
Okay, so I think Ravi has a different thought. So let me just quickly understand the thoughts of Ravi. Ravi, so why do you want to go with D?
Sir, here essay is required to comply with, sir.
Correct.
I think not to be complied with.
Okay, great. So this can definitely be a reason. Yes. So I think Geeta was trying to explain. Yes, Geeta, over to you.
So, because auditor means practitioner has to assist the management. So
Right.
other SCs also have to follow.
Recording in progress.
Okay.
We are involved in that preparation, so that there is the entire responsibility with the management only on that. So whenever we find where error or omission or is there any problem, we will bring into the matter of those charged with the governance or the management. That's it. From where our responsibilities end.
Okay. Anyone else?
Because sir, SA 510 will only be applicable when the auditor is providing his assurance services. So in that case,
Okay.
the auditor is appointed as a compilation services provider. So I think the option B will be the most appropriate.
Okay. So let us just look at all of these options one by one. One, if you look at A, such error should straightaway lead to qualification. So in this case, is the practitioner required to express an opinion?
No, sir.
No. So that means A is not possible. If you look at D, I think the one which we have discussed quite a lot. Above said matter relates to SA 510, and this will have no impact on reporting. So it's trying to say that actually it's a matter covered by SA 510, has got nothing to do with compilation, so that's why it should be ignored. Why? Because you are not looking at SA 510. So the point is correct, but the important point is that can you ignore the errors? Because as a practitioner, you are also a professional. So if there are some errors, can you just ignore that altogether because there is another auditing standard? I'll not be looking at it. That
No,
doesn't seem to be correct.
Ignore the error.
No. So let me just complete. I'll come to your point. C. Knowledge of such type of errors has no effect on compliance of ethical requirements. There again, it's inappropriate because ethical requirements have to be followed every time any job is performed. B. Such type of error should be brought to the knowledge of the management. See, when you are doing a job, of course, your idea is not to look at the errors. You are not there to check, find out the errors. But if there are some apparent mistakes, so as a professional, you go and tell the management about it. Yes or no? Yeah? Clear? So that's why in this situation, what should you do? You should always reach out to the management. Clear on this? So what should be the right option? B. Yes, Swami, over to you. You wanted to explain something?
Yes, sir. However, when there is a error, auditor should not leave it as it is. It is a duty of the auditor to inform to those charged with governance and management as appropriately.
Correct. And why is that required? Because you are going by the ethical requirements. Okay, so ethical requirements, do you need to follow or not? Of course. So when you follow the ethical requirements, you cannot ignore such aspects, because as a professional, you are expected to be looking into any such thing. Okay. Next, as regards suggestion of one of the team members regarding verification of all the revenues of the company, which of the options you will consider? Suggestion of team member is proper. Verification is part and parcel of such engagement. Absence of such verification may make financial statements misleading. So that's why this suggestion is again appropriate. Suggestion is not proper, as verifying the accuracy, completeness is not required in this type of engagement. Suggestion is not proper, as the compliance with qualitative requirements is not required. Over to you. What do you think?
C, sir, C.
C. Why C? What about others?
Assurance is not given by us. And verification and all, whichever work is given to us, we have to do that only.
Okay. Shabd is going with B and Sumit is going with A.
I'm going
Yes.
with the C.
Shabd, over to you. Shabd, you're there. Then I think Sumit is going with A. Sumit, why you are going with A?
So that
Why is C? Saminathan, I think you mentioned C.
Yes, sir. I mentioned C, sir.
Why C?
See, it is not the assurance service, first of all.
Right.
This is but the or describe the applicable is the financial, but in this case, it is very clear that regarding the team member, the verification of the all revenue, and this is not appropriate, and also that accuracy and the completeness of the information provided to the management is not required, because we are we are not giving the assurance services. This is not our auditor duty to confirm that accuracy and completeness of the provision information is correct or not.
Right. So now in this case, let's try to understand that this is not about any audit. Okay. Actually, if you look at the firm, they are not the auditors. It's a practitioner who has been involved. And what is the scope? Does the scope include the verification? That is not required as a part of this scope. The point is that if, let's suppose, this is not required, if you come across any error like the one we had in this question number 1, so do we need to look into it? Yes, of course, we need to look into it. We need to communicate with the management. But as far as its checking is concerned, something which is not a part of scope, how can you do that? It's not an assurance engagement. Okay, so that's why it cannot be A, it cannot be B, it cannot be D. So what is the right answer? C. Okay. Next. In view of the team member's suggestion related to adherence to appropriate standards for quality control, which of the following is relevant in the context of above said engagement? SA 220 is applicable, has to be followed by engagement partner meticulously. Please remember SA 220. SQC1 is applicable. Both SA 220 and SQC1 are applicable. SA 220, SQC1 both are not applicable. However, SRS 4410 lays down detailed quality control requirements for such type of engagement. Over to you.
Sir, here option D is correct, I think, because the SQC1 is applicable for the overall firm level, and
Right.
SA220 is applicable for the assurance engagement.
Right.
So because these both are not applicable, and the SRS 4410 also lays out some ethical requirements, so
Okay.
that's why I choose the option D.
All right. What about others? Ravi is
Sir,
going with C.
Sir, it is form. SQC1 is applicable.
Okay, so you are going with B. So Geeta, can you please explain?
Because for firm level SQC1 is applicable, no? So
Right.
as standard on quality control.
Yes. So in this case, what is the right answer? SQC1.
Sir, I also go with the option number B, sir,
Very good.
because the SKC1 is applicable to all the engagement. The
Correct.
firm level is, say, SC 200 is applicable only to the audit of financial statement.
Right.
See, this is a review function, that is a
Right.
compilation. It is not providing any assurance on it.
Right.
So SKC1 only is applicable on this case.
Correct. See, of course, 220 cannot apply. So, of course, the option number A and C straight away go out because 220 is anyways in relation to audit. So, therefore, clearly you can say A and C go away. The point is that SRS 4410, the quality control requirements which it lays down. So, do you need to follow that? Of course, you need to follow that. But beyond that, at the firm level, SQC1 that you have, can you ignore that? No, you can't ignore that. Okay. Yeah, you can't ignore that. So, you can't say that SQC1 will not apply. SQC1 will apply. So, that's why what is the right option? B.
Okay, sir, got it.
Yeah. Which of the following is most appropriate as regards omission of expenditure under appropriate heads pertaining to Rourkela unit in the compiled financial statements? Above mentioned omission can be misleading. By disregarding such an omission, fundamental principle of integrity is violated and the engagement cannot be performed in accordance with ethical requirements. B. Above noted omission can be misleading. By disregarding such an omission, fundamental principle of objectivity is violated and engagement cannot be performed in accordance with ethical requirements. C. Above noted omission has no effect on performing such compilation engagement. D. Above noted omission has no effect on performing and issuing reports under such compilation engagements. Over to you.
I go with the option A, sir.
Okay. What about this? Quickly. What about this?
Option A.
Option A. Okay. What about this? Quickly. Ravi,
Sir,
Shab.
A, sir.
You are going with which one, Geeta?
Sir, A.
A. You are also going with A. Okay. Okay. So can you please explain? I think everyone is going with A. Why it has to be A?
Sir, I am saying why means the integrity means never associate with a report, that is misleading.
Right. So in this case, clearly you cannot ignore this error. Yes or no? Because ethical requirements will have to follow. Yeah. So
Yes,
you
sir.
can't go with C and D. Yeah. And it's matter of integrity. Yes or no? So that's why you have to go with A. Next. Detailed documentation is maintained during the course of compilation engagement. Which of the following statements is most appropriate regarding the assembly of final engagement file? Final engagement file should be assembled in no more than 60 days after the date of report. Not more than 120 days after the date of the report. Should be assembled on a timely basis after the engagement report has been finalized in accordance with the time limit set by the firm. No requirement of assembly of final engagement file in a compilation engagement. Over to you. Which out of these options you will say is the correct one? I can see one response coming up. Just a minute. Okay, Ravi is going with, okay, C. Okay, Ravi says C. What about others?
Option C,
Sir,
sir.
I'm going the option C, sir.
Okay, you are also going with C.
Yes, sir.
Yes, sir.
Okay,
C
then I
only.
think
Because
Geeta is going
61
with
Yes, sir. C only because
C
60,
only.
120 days is not mentioned.
Correct, because 60, 120 days is not specified. And of course, you can't say that you will not do the assembly. That is the requirement. So you have to do that. Okay, so that's why in this case, what is the right option? It has to be C always. Okay.
Sir, the thing is that why I chosen the thing, the time limit
Yes.
of 60 days is only for audit engagement. This is not
Correct.
a audit engagement.
Okay.
This has to be filed as on the timely basis.
Right.
And this is not that audit engagement. Again, the 60 days the criteria is not applicable to this.
Correct. Very good. Right. Okay. So let's pick up one more. Yes. Let's look at this question now. A company asks you to carry out the process of confirmation of its accounts receivable having balances in excess of rupees 10 lakhs as per its books of accounts at the close of the year. The work to be performed only involves preparation and sending the confirmation request to such parties, analysis of variations on receipt of confirmations, submission of a report in accordance with professional standards. Now, in this case, what points do you need to keep in mind for inclusion in the report specifically for such engagement? So, before you get on to the answer, okay, so let me just quickly, first of all, help you in terms of how you approach your answer. So, some of the things that I'll you can say sort of require. One thing will be the standard. So which standard you think will apply in this case? So that's one. Number two, if you think that this is the particular standard which will apply to this, okay, so now what are going to be your considerations as a practitioner, okay, or as a chartered accountant, or as a professional in this case? Yeah, so that sort of thought process you need to have, and accordingly you need to apply, and accordingly you need to answer this. Over to you. Yes.
So
So first of all, I think we can discuss which standard you will consider. Yes, Geeta, please go ahead.
4,400 agreed
Okay.
upon procedure is there.
Okay.
And we have to decide this with the management what we have to do.
Okay.
And agreed upon procedure we have to written we have to take this.
Okay.
And fact findings and all we have to give, and this is for only specified users, and it is
Right.
restricted for other parties we have to write. This much I know, sir.
No, very good. Very good. So I think you have just tried to cover up all the pointers, which is good. So in the exam, that is what you require. You need to remember the points, because if you remember the points, then drafting becomes easier. So that is not going to be a big challenge. Anyone else who would like to add to this or share some different thoughts on this? Over to you quickly. Anyone else? No? All right. So now, so let's look at this. It's about AUP clearly. So if you look at the question, some specified procedures are already given. Okay. So it's not about compilation. It's not about thinking or maybe auditing something. No, procedures are there. You have to perform the procedures. So what are the points you will consider? First of all, you will consider that you have a boundary in terms of these procedures to be performed. It's not about audit, it's not about review, so you are not required to express the opinion, you are not required to give any conclusion. Okay, so now what are the things you will include sort of in your report that goes out? Statement that the procedures performed were those agreed upon with the recipient. Statement that engagement was performed in accordance with standard on related services, which is SRS 4400. Identification of the purpose for which the procedures were performed. Of course, very important point will be about listing down the procedures. In the report itself, you will list down the procedures because that's what you have done. Description of the actual findings. So you'll say what is it that you have done, and if you have got any observations or the findings, means the outcome. If there are observations, you'll write it. If there's no outcome, you'll say no exceptions noted. Okay, so these two, I would say, are extremely important because this is actually what you are required to do. All other things is more of an explanation, yeah, which goes around that. Correct? Then a statement that the procedures do not constitute either an audit or a review, something that we talked about. Statement that had the auditor performed additional procedures, maybe that of an audit or a review, other matters might have come. So he's clarifying that if I would have performed something more, something else could have come up. Okay, then of course about the restriction that this is meant only for limited parties. Then the statement that report relates only to these limited areas, which are the ones on the procedures have been performed. Right? Clear on this? Everyone?
Yes, sir. I have a general question regarding this SRS.
Yes.
Sir,
Yes.
where this series of 4400 comes? Like in the IFR, like in the India, the IFRS series has been come. So from where that 4400 series has come?
So why do you want to associate this to accounting standards? I couldn't understand that point.
No, sir, I'm taking an example that in the India has been taken from the IFRS. So
Right.
where this 4400 only, why not 3300 or any other thing?
Okay, so you are saying that what is the reference point? Where do you draw? See,
Yes,
all
yes,
of
sir.
these auditing standards that we have, yeah. So they are also drawn from international auditing standards. ISA, if you look at. Okay, maybe later on you can do Google, you can refer ISA. ISA is International Standards of Auditing. So all of our standards on auditing, means auditing standards in India that you are following, they are largely drawn from international standards of auditing. So that is where these are picked from. And as far as the series are concerned, okay, some of these series that go out, so these are again drawn from those places only because there are different aspects. So that's why they are creating different series. So that's how they have been doing this. Okay.
Okay. Yeah,
Right.
thank you.
All right. Any more questions, doubts that you may have?
Sir, also the statutory auditor is not permitted to do the compilation audit, the compilation services of financial information.
Correct. That's correct. That is more of a management function.
Yes, sir.
Yes. Anyone else? Any more
And sir,
queries?
and there will be the conflict of interest because the engagement partner has also helped in the compilation engagement, and also after preparing he is auditing. So there will be a segregation of duty for conflict.
Yeah, of course. See, this is more of a management function, kind of, you can say. Yeah, so that's why you don't see the auditors doing this. All right. Any more questions? Otherwise, we can just close our discussion. Yeah, everyone through? Okay, great. So thanks everyone for your time and for this wonderful participation. Now I can just hand it over to, I think Tanya ma'am is there. Yes, over to you.
Morning, everyone. I hope you all are doing great. Thank you, Achal sir, for the wonderful session and taking up all the queries. So in chapter number 8, we have delved into special areas of auditing. where we saw how an auditor wrote changes when dealing with financial statements that are not prepared using general purpose frameworks. When it's audits whether it audits under SA 800 for special purpose framework or SA 805 or 810, each situation calls for careful planning and above all sound professional judgment. So these two chapters are also important. And in chapter number 9, we have seen about audit related services engagement that don't offer an opinion but still carry professional responsibility. In SRS 4400, we understand that how agreed upon procedures offer value without assurance, whereas SRS 4410 introduces us to compilation engagements where our role shifts to assisting in presentation rather than evaluation. So I hope you all are revising your syllabus wisely. Can I ask you a few questions? Very small.
Yes.
Okay. So SA 800 applies when the financial statements are prepared under Ind AS only or for tax filing purpose in accordance with special purpose framework or for consolidation purpose only.
Option C.
In accordance with special purpose framework.
Yes.
Everyone agrees with the same?
Yes, ma'am.
Smenathan, are you active in the class today?
Yes, ma'am. Can you repeat the question again?
SA 800 applies when the financial statements are prepared under Ind AS only for tax filing purpose only in accordance with special purpose framework or for consolidation purpose only. 800 applies when? Special purpose framework, na?
Yeah, it's applied the special purpose framework, ma'am.
Okay. Does 800 applies to 805 auditor is auditing complete set of financial statements, single set of financial statement or interim financial statements?
Single set of financial statement, ma'am.
Everyone agrees with the same?
Option B.
Yes, ma'am.
Any other answer? Okay. In an engagement under SRS 4400, practitioner expresses an opinion, reports factual findings without providing assurance, provides assurance, or issues a limited review report.
First
Option
answer.
number A, ma'am. A.
Practitioner expresses opinion.
No, he will not express the opinion. Only the factual finding only he will report.
Yes, without providing assurance, right?
Yeah, without providing assurance.
Okay.
Madam, give the option with A, B, and C and D. Because
Okay, sure. In an audit under 805, the materiality is determined based on A, financial statements as a whole. 805 materiality is determined based on A, financial statements as a whole, B, general purpose framework, C, intended users of the specific element audited, and D, guidance under the Companies Act.
option C.
Option number C, ma'am. It's always between that intended user and the management. They will agree that materiality. However, the auditor, while doing his audit work, he can fix the materiality, performance materiality below that level.
Okay.
As per SA 320.
Okay. So,
But
which standard? Yeah. You want to say something?
tell me, ma'am.
Sorry.
No, I'm not telling anything, ma'am. I am listening you.
Okay, sure. Which standard applies when a CA helps prepare financial statements but provide no assurance? A, SA 200, B, SRS 4410, C, SRS 4400, and D, SA 800.
Ma'am, it's 4410.
Right.
Compilation.
All of you are well prepared, right? So now tell me in true and false form, SA 805 is applicable to audits of consolidated financial statements.
False.
No, ma'am, false.
examples.
Why?
Why?
Yeah, it is applicable only that a single financial statement and specific elements, accounts or items of the financial statement.
Okay. SRS 4400 doesn't require the auditor to be independent unless specifically agreed.
Yes, ma'am.
Yes, ma'am.
Yes.
Independent is not required. It's a
Yeah.
limited only.
So, so I can say that all of you, those who are attending live, at least they are well prepared for the examination and they are really revising from the classes.
Yes, ma'am. Thank you.
I-
You are telling us, no, that you have to revise first. We are
Yes,
revising.
but written practice is also very important. We generally see that students know the answer, but they don't know how to frame the answer in the examination.
Yes, ma'am.
So it is advisable to all of you to at least practice 3 to 4 answers of the auditing in written on daily basis as you write in your examination. So wish you all the very best and see you in the next class. Thank you,
Yes,
Achal sir.
ma'am.
Thank you,
Yes,
everyone.
yes, ma'am. Thank you, ma'am.
Thank
After our
you.
discussion, I prepared myself the basis of opinion, others' opinion, that basis of that, all these things I prepared on my own. I have practiced 4 to 5 times again and again.
Nice. If you want, you can share your answer with us also so that we can check if you find a difficulty anywhere. You
But
can
where
call.
we have to send, ma'am? After writing, where we have to send it?
You can send it at auditing final. Let me auditing dash final @ICAI.in. Can you see the mail ID I have sent in chat?
Yes.
Auditing dash final. You can write here if you find any difficulty. You may call us on this
Okay,
number
ma'am.
also 0120 3045 925.
For other subjects also we have to send here, ma'am?
No, not for other subjects. I'm just saying if you feel that you wrote the answer and you want us to check the answer, then you can write us. Not each and every time we can check your answer. But yes,
Okay.
you can call for any query, and there is open house session for auditing tomorrow. You can ask your queries from on in that also.
Okay.
Okay, on any topic of auditing only. For SFM, it is today. AFM.
For
For
FR,
AFM,
ma'am,
it is today 4 to 5 p.m. on Zoom.
and for FR?
For it is all on Monday. Every Monday it is 4 to 5 p.m.
Okay.
Yeah. Don't you join? I think there is one student out of you who joins. I guess
Yes,
some of
I
you.
I am joined.
Yes. Sumit joins the session, so you all can join. Thank you, everyone.
Thank
Thank you, ma'am. Thank you, sir.
Thank you. Bye.
thank you. Bye.
Yes, Shruti. Thank you.